I like the dynamic of this show so far. I like where we're going with all of this. All right. More irresponsible speculation still to come as to the president's visit. But we are going to talk a little bit about what is expected here, as the general thinking is that the president's going to come and he's going to speak and he's going to talk about easing lending requirements. So we're going to talk with Matt Oliver from Lund Mortgage about that right now. We're going to check on traffic first, so give a chance here. Our KFYI East Side, West Side traffic with Steve Trella. Hey, Steve.
Hey, Chris.
Hey, good morning, Chris Merrill, News Talk, or good afternoon, I guess. Listen, I almost died a couple weeks ago, okay? It's just, I don't even know what time of day it is. It's what happens when you almost die. I'm going to milk this as long as I possibly can. Love it. Love it. News Talk 550 KFYI and iHeartRadio, KFYI.com/listen. Joining us now from Lund Mortgage is Matt Oliver. And Matt, you are an expert when it comes to obviously lending, but also the lending rules, the lending laws, and sort of this this general feeling like things tightened up maybe even a little bit too much after the last meltdown that we had. So, Matt, first off, welcome to the show there, my friend. It's good to hear from you.
Yeah, nice to speak with you. Welcome to Phoenix.
Thanks, bud. I appreciate it. So the president is set to speak at Central High, and we expect that he's going to announce some changes. When you hear that, first of all, what is it you expect the president's going to say? And then follow that up with what would you like the president to say?
I don't know that he's going to say a whole lot that we already haven't heard. They recently changed the government-sponsored enterprises. Fannie Mae and Freddie Mac went to allow 3% for a down payment. It was previously 5%. It's now at 3%.
Okay.
So they're doing that in hopes to spur first-time home buyers into the market with a lower down payment.
Okay.
So that got released a couple weeks ago. The only other thing that I've been reading more that they could come out with is trying to lower the monthly mortgage insurance on FHA loans. Right now they're pretty pricey on an FHA loans, and FHA loans are a good area to let first-time home buyers back into the market.
Again, low down payment, your rate's going to be a little bit higher, but the down payment's going to be lower, right?
Yeah. FHA is 3.5% down, so they're kind of competing now, the conventional loans versus FHA loans.
Okay, with FHA and the mortgage insurance that they have on that, why would somebody go with the FHA at 3.5 when they could get the Fannie Mae at 3%?
Well, the difference is FHA rates are actually significantly lower than conventional rates, but in our state, with the crisis that we had back in 07, 08, 09,
right,
more people had credit discrepancies that FHA is more lenient with.
Okay.
So your foreclosures, more people would, if you had a foreclosure, it's 7 years on conventional, it's 3 years on FHA.
So that could be very beneficial, especially since we're right there at that, just over 3 years for some of these people that may have walked away from their homes that were underwater in 08 or 09 or 2010, whereas they may have some more years to go with the conventionals.
Correct. So if they were able to lower that FHA mortgage insurance premium, it may allow people to buy more homes, buy more of a higher priced home and still afford the payments.
Okay.
That's hopefully I would like to see something on that.
So Matt Oliver from Lund Mortgage is joining us right now, and you talk about easing those things. Did things get too tight after the meltdown, or did they need to tighten up a great deal? And now this is just sort of the natural evolution of loosening a bit as the people with money have purchased their homes, and now we're kind of left back with first-time home buyers and those that may not have money for a down payment.
Yeah, I think it did. We had obviously little regulation back in the heyday, and then it got really tight. But it's not tight so far so much now as it's a lot of documentation. There's a lot of paperwork that needs to be provided. People are qualifying a lot. I mean, it's simple to qualify with good credit income. The income is the challenge that I see because we have a lot of self-employed people in the state of Arizona, and that's hard for them to qualify income-wise when you're looking at tax returns. Okay.
When you're sitting down and you're qualifying somebody, and you say, "Look, you've got to have your 3.5%, and you've got to have this, the qualifying and the income and everything else." What are some of those other options? Self-employment obviously is a big thing. Is down payment still a big challenge? Because housing prices in Arizona are, I got to tell you, they're looking nationwide. They're pretty much in check. They're not out of control. like we see in some of these other states in West Coast if you're California, Washington, or if you're East Coast if you're in New York, or if you're in Maryland or whatever, where things are just astronomical. They're pretty in check here. Are people able to come up with the 3.5%, the 3.5%, the 5%?
Well, the crazy thing is on FHA with 3.5% down and conventional on 3% down, it can be a gift from a family member or relative. So the down payment isn't really a challenge that I can see. I mean, they've opened that up to, if you get a gift from a relative, you can buy a home.
We need better relatives.
Aunt, uncle. I mean, they do fiance. Yeah, heard you say we need better?
Yeah, Matt, you and I need to get some good, rich relatives, right?
Right.
And people kind of give us a hookup.
Yeah, that would see. So the down payment part of it is easy, I think.
Okay.
I don't think that's very tight. Veterans for VA, it's no money down. So it's not really the down payment. It's just qualifying. Qualifying income-wise is a challenge because you have some people that have two jobs right now with the economy. They're maintaining two jobs or part-time jobs. Mm-hmm. There's a timetable on qualifying with that kind of income.
So talk to me then about this. Because I've heard this before. People say the economy, what it is, but the with the exception of the national debt and the deficit we're operating in, which is kind of craptacular. The jobs continue to get more and more people are employed, and consumer confidence continues to grow. Do you see that making a change here in this coming year? Do you see, hopefully, this economy growing at an even, I don't want to say faster rate, but maybe a safer, steadier rate?
The challenge that I think needs to get figured out, I don't know how it will, but is wage growth. I mean, as you know, we're at a lower pay scale right now than we were 5 years ago.
Yeah, I'm not. I'm super rich, man.
Well, that's the challenge that's involved with most people is maintaining a decent salary that can afford this stuff, because we're not really seeing any challenges yet with the student loan stuff. I would
Which
say,
was a big fear, I know.
Yeah, no, it is a big fear. We hear about it constantly, but that's not really a challenge at this point yet. People can still go out and buy a home. It just depends on their debt to income mostly. That would be the most challenging part.
Do you see? Is that student loan? Is that the next thing you see? As so many people have talked about? Do you see that as being the next bubble? I guess that we need to be concerned with.
It's going to depend on how the president handles that stuff. I mean, there's been a lot of talk of forgiving that student loan debt. That would, I mean, I don't know how that'd
be
crazy,
tough on some banks, wouldn't it?
Yeah. Well, so that's probably going to end up being the next bubble to pop. But I don't think housing. I think housing's great right now. The prices did stabilize.
Yeah,
they did go up real quick, but they have stabilized right now. Rates are, of all things, they stopped quantitative easing at the end of October. And rates are lower now than they were then.
Which is completely counter-logical, isn't it?
It's counterintuitive to what they were trying to do, because they were spending at that point $5 billion a month every month, and to keep rates low, and they've backed out of the market, and it's gotten better. Now, some of that could be due to a bad economy or fearful economy, so everybody jumps into the bond market rather than stock markets. But,
yeah. Well, we'll see how things kind of crapped out on us a little bit today. We'll see where that goes.
Yeah, well, it was a good day on the bond market. So
that's a great day. We like that. Matt, talk to me then about, as you mentioned, Matt Oliver from Lend Mortgage is with us, and an expert on the lending and the rules and the regulations and things like that. Matt, as you mentioned, VA, you can get zero down loans. I think Navy Federal Credit Union has some zero downs. I think there are some other zero down programs out there. But do you see things loosening up as much as they did pre-2006 or 2005 or whatever else it is? Do you see us getting back to a place where banks are willing to take huge risks to do these loans?
No, not at all. Not at all. I mean, obviously, the big thing that could be useful today would be like some of the stated income for the self-employed borrowers. Mm-hmm. There are some programs out there, but you're taking a significantly higher interest rate, and you got to have a lot more skin in the game, a lot more money for a down payment. I don't think we'll get back to that easing at all. I think the new narrative moving forward is just be ready to provide every document possible: bank statements, pay stubs, W-2s, that kind of paperwork.
I got to tell you, it was so nice back in the day. I'm going to remember the good old days when I could go in and I could have zero down, and I could still get a rate that was super low. And
well, the 3% down with a gift is almost like that.
Well, it is. You're right.
I mean, it is. It's just at that point you got to show your ability to repay back the mortgage on a monthly basis.
Yeah.
That's the tight lending if you hear it right now. I don't really think lending is that tight, to be honest with you. I think it's probably just about right.
Yeah.
But we do need some programs for some of these more individuals that have creative income, or different kinds of
income.
income.
I like that, creative income.
Yeah.
Is that okay? And that's where you're talking about where we need to just verify everything again and again, with the W-2s and the pay stubs and everything else. It's just verifying instead of the creative income.
Yeah.
All right, very good. Matt Oliver, Lund Mortgage. Matt, thanks so much for the information today. I appreciate it, bud.
Thank
Take
you
care.
very much.
Good luck. It's going to be a great year for you, I think. Good year. Good year, my man. Good year.
Positive attitude,
right? I like that. Okay, positive. Like it. Still, the president coming to town, and as we know, then he's looking at, I don't know, I guess making things a little bit easier for especially first-time home buyers, which means we can all live the American dream. Yay! Now, remember, when Clinton wanted to do that, that's kind of what led us to that last bubble burst. But, Matt just pointed out, I don't think we're going to get to that point again. I think hopefully banks learned their lessons. My concern is always that the banks that learned their lessons are the ones that went under, and the ones that didn't learn their lessons got bailed out. So, as Matt pointed out, the investors have to have skin in the game, but it's nice to have the bank have some skin in the game too. And that takes us back to conversations we've hashed out for the last 7 years over how we should have dealt with the bubble burst and the mortgages there. All right, the president coming to town, and we're talking a little bit about the logistics then too of a president making a visit to a high school. And we'll continue to kind of dive into that. We'll get your feedback as well. You're always welcome on the program at 602-260-KFYI, 602-260-KFYI.